All right, so you guys have sent in some really interesting stuff lately. A lot of questions about Bitcoin's future. Like, what can we expect to happen, price-wise next week? So we're doing a deep dive into some predictions, all based on this recent episode of the Crypto Chronicles podcast. They really got into the weeds on this one, and it sounds like next week could be a wild ride, especially since Bitcoin is currently hanging out around $93,000.
Yeah, that's right around where it's been, kind of bouncing around that level for a bit. And what's interesting is, we're talking about a very short time frame, which trying to predict price movements in crypto is always a challenge, but especially in such a narrow window.
Yeah, it's got to be like forecasting the weather, but for something even more unpredictable, right?
Exactly.
So the host of Crypto Chronicles mentioned a few key things that could really move the needle for Bitcoin's price next week. One of the big ones was the growing influence of institutional investors. Like, didn't we see a bunch of those Bitcoin spot ETFs get approved last year?
We did, yeah, and that was a huge signal. It basically meant that institutions were getting more comfortable with Bitcoin as an asset class. And I think what we need to watch for now is any news about those institutions. Are they going to increase their exposure? Are they going to add more Bitcoin to their portfolios? Because if a few big players announce something like that, it could really create a surge in demand.
Okay, that makes sense. But couldn't that kind of influx also create, like, a ton of volatility? I mean, the crypto market's known for those crazy swings, right?
Oh, absolutely. I mean, it's so sensitive to any kind of news or speculation. And speaking of things that could, potentially spook the market, the global regulatory landscape, that's still a huge question mark.
It's true. It feels like every other week there's a new headline about some country trying to figure out what to do with crypto.
Yeah, and the host on Crypto Chronicles specifically highlighted the US and Europe as key jurisdictions to watch because, any major policy announcements from them could ripple through the whole crypto space.
Yeah, it's got to be tough for investors to navigate that much uncertainty.
It definitely adds another layer of complexity.
Yeah.
And it's even more complicated when you consider how different countries are approaching regulation. Like, you have China with their complete ban, right? While other regions are trying to find that middle ground where they encourage innovation, but also, protect consumers.
Yeah, it sounds like a recipe for some potential price swings. I mean, it could really go either way, depending on what happens. But even with all that uncertainty, the folks on Crypto Chronicles sounded pretty optimistic about Bitcoin's prospects for next week. What were they basing that on?
Well, they mentioned a few things. Remember all that hype around DeFi and NFTs?
Oh yeah, that was everywhere for a while.
Well, there's been some talk about a fresh wave of projects and partnerships in those areas, and historically, when those sectors are doing well, it tends to benefit Bitcoin as well.
Oh, interesting. So even though those projects aren't directly tied to Bitcoin, a rising tide kind of lifts all boats.
Yeah, I think that's a good analogy. Bitcoin, it's the original, it's the most established cryptocurrency. So it often acts as a sort of bellwether for the entire market.
That makes sense. But I can't help but think about past Bitcoin rallies,
Yeah.
especially those tied to those halving events. And they've often been followed by like some pretty significant dips. So how can we be sure that, this time is different?
That's a great question, and you're right to be cautious. Past performance never guarantees future results. And, while the upcoming halving in 2028 is generating a lot of buzz, it's important to remember that market cycles are influenced by a lot of different things.
So the halving itself isn't like a magic bullet for guaranteed price increases.
Definitely not. It's a significant event, for sure. It reduces the rate at which new Bitcoins are created, and that reduction in supply, combined with growing demand, could theoretically push the price up. But there are always other factors at play, like macroeconomic trends, regulatory developments, even just investor sentiment.
Right, right. It's never just one thing.
Yeah.
So, okay, let me see if I got this straight. We've got potential upside from like increased institutional adoption and the FinFST space. But we also have this looming threat of regulation and the fact that the halving doesn't guarantee anything. That's a pretty wide range of possible outcomes, right?
It is, and that's part of what makes this market so fascinating, but also, a bit nerve-wracking.
Okay, so where does this leave us then? We've got these bullish signals, we've got potential headwinds. What's the most likely scenario for Bitcoin's price next week? Like if we take all of this into account, what do you think?
Well, Based on what the host on Crypto Chronicles was saying, if we see a bunch of positive news all converging at once, like let's say more institutional investment coming in, maybe some positive developments on the regulatory front, and continued growth in DeFi and NFTs, if all those things happen, we could see Bitcoin break through that $95,000 resistance level
Yeah.
and potentially even make a run at $100,000.
Wow, that would be quite a rally. But on the flip side, what are we looking at if things take a turn for the worse?
Yeah, they talked about that too. I mean, there's always the possibility of negative news, right? Maybe a major regulator decides to crack down on crypto. Or maybe we see a broader market downturn, something triggered by those macroeconomic factors we were talking about. In those scenarios, they suggested we could see Bitcoin dip back down to like $90,000 or even lower.
Yikes. It sounds like it's going to be a nail-biter of a week.
Yeah.
You keep mentioning those macroeconomic factors. What exactly are you talking about?
Oh, things like inflation, geopolitical uncertainty, all that fun stuff.
Ah, right, the stuff that's always looming in the background.
Exactly. And even though, Bitcoin is often touted as this uncorrelated asset, history has shown that it's not entirely immune to those global economic shocks.
Yeah, I remember that big sell-off we saw in 2022 when inflation was running wild.
Yeah.
Bitcoin definitely wasn't spared.
Nope, not at all.
And then, of course, there's the regulatory wild card. Who knows what those policymakers will come up with next?
You never know. And it just takes one tweet or, one policy announcement from someone like the SEC chair. And that could send shockwaves through the whole market.
That's true.
And it just reminds us that even though crypto is all about decentralization, it still operates within this larger system that can exert a lot of influence.
Yeah, that's a good point. It's like it wants to be its own thing, but it's still connected to everything else in a way.
Exactly.
Well, this has been really insightful so far. I mean, we've just scratched the surface. But already there's so much to consider. We've got those potential Bitcoin price swings to watch. And we've got to keep an eye on the broader crypto ecosystem too, right?
Definitely, the whole space is interconnected.
All right, so maybe in the next part we can dive a little deeper into that. Like, what role do altcoins play in all of this? And how does market sentiment, that overall feeling about the market, how does that impact things?
Yeah, those are great areas to explore. And we can also get into the upcoming halving event in more detail.
Awesome. I'm looking forward to it.
It's interesting. We often talk about Bitcoin as if it exists in this bubble, but it's important to remember that it's part of a much bigger ecosystem.
Yeah, it's like trying to understand a single tree without looking at the whole forest, right?
Exactly. And one of the most interesting parts of this ecosystem is the relationship between Bitcoin and other cryptocurrencies.
Right, altcoins as they're called. Basically everything that's not Bitcoin.
Yeah.
But how do they actually influence Bitcoin's price? Like, how does that work?
Well, you got to think about it this way. When the entire crypto market is going up, investors are looking for ways to diversify, right? And that often means adding altcoins to their portfolios, which can, push those prices up even further.
So it's like a chain reaction, kind of. Like the enthusiasm for altcoins spills over into Bitcoin.
Yeah.
And that drives up demand and ultimately the price.
Precisely. And it just shows how important it is to pay attention to the overall market sentiment.
When you say market sentiment, you mean like the general feeling about the market, like whether people are feeling optimistic or pessimistic?
Exactly. You often hear people talk about bullish sentiment versus bearish sentiment. And in the world of crypto, emotions can play a huge role in price movements.
So if everyone's feeling good and they think the market's going up, it can actually become a self-fulfilling prophecy.
Absolutely. Because as more people jump in, it pushes the prices up even higher.
Okay, but wouldn't that make the market really vulnerable to, like, sudden changes in mood? What if something happens that spooks investors? Sends them running for the hills.
That's a really important point. The crypto market, especially in the short term, is super influenced by news, by speculation, even by rumors.
So if everyone suddenly flips from bullish to bearish, it could trigger a massive sell-off.
Exactly. And that's when you see those really rapid price declines.
Okay, so how can we tell what the sentiment is? Like, is there a way to actually measure the emotional temperature of the market?
Well, there's no perfect tool, but there are a few things you can look at. Social media can be a good indicator. Like, are people excited and talking about all the possibilities? Or are they expressing fear and uncertainty?
So it's about reading the digital tea leaves, kind of.
Yeah, in a way.
Are there any, more technical indicators that can give us clues about sentiment?
There are. Trading volume and price volatility are two key things to watch, because if you see high volume and high volatility, it usually means there's a lot of conviction behind those price movements.
So whether people are feeling bullish or bearish, if they're all on the same page, it can amplify those price swings.
Exactly. And this brings us back to that upcoming Bitcoin halving in 2028, which, as we mentioned earlier, is already generating a lot of buzz and could have a big impact on market sentiment in the years to come.
You mentioned that the halving reduces the rate at which new Bitcoins are created, but I'm still a bit fuzzy on why that's such a big deal.
Sure, let's break it down. So, Bitcoin has this fixed supply cap rate. 21 million coins, that's it. There will never be more than that. And the halving is this mechanism built into Bitcoin's code that basically cuts the reward in half for miners, the people who are validating transactions and adding new blocks to the blockchain.
Okay, so less Bitcoin is entering the system, but demand is presumably still going up. Wouldn't that naturally push the price up?
That's the general idea. And historically, we've seen some pretty significant bull runs in the lead up to and after halving events.
So we've got this underlying scarcity built into Bitcoin, and the halving event is like this reminder, right? It's like, hey, remember, this stuff is limited.
Yeah, and it seems to have a real psychological effect on investors.
Okay, so it sounds like a recipe for price appreciation over the long term.
It certainly has that potential. But again, nothing is guaranteed in this market. Past halving events have been followed by both booms and busts.
Right, we can't just assume history will repeat itself. There's so many other factors involved. Speaking of other factors, I wanted to ask about technology. Like, I've been hearing a lot about the Lightning Network. Can you explain what that is and how it could impact Bitcoin?
Oh, yeah. The Lightning Network is a game changer. It addresses one of the biggest criticisms of Bitcoin, which is, transaction speed and fees. It's essentially what they call a layer 2 solution built on top of the Bitcoin blockchain, and it allows for near instantaneous transactions with much lower fees.
So it's like a superhighway for Bitcoin transactions, bypassing all the congestion on a main blockchain.
That's a good way to put it. And as more people adopt it, businesses, individuals, it could really make Bitcoin more usable for everyday transactions, which could, in turn, make it a more viable alternative to traditional payment systems.
That makes sense. If it's easier and cheaper to use, more people will want to use it.
Exactly. And alongside the Lightning Network, there have been other technological advancements that are improving Bitcoin's functionality, like, for example, the Taproot upgrade, which was implemented a couple of years ago. That enhanced Bitcoin's privacy and efficiency.
So it's not just about the price going up. It's about making the technology better and more user-friendly.
Exactly. And that's what's so cool about the Bitcoin ecosystem. It's constantly evolving and improving.
That's a good point. You mentioned the Bitcoin community earlier. Can you talk a bit more about that? Like, why are they so important to Bitcoin's future?
The Bitcoin community is really the driving force behind its success. It's this global network of individuals who are passionate about Bitcoin and its potential to, change the world.
So it's more than just people buying and selling Bitcoin.
Oh, yeah, much more than that. There's a real sense of community, of shared purpose. They're constantly having discussions, sharing knowledge, collaborating on projects.
It sounds like a real grassroots movement.
It is, and this community is one of Bitcoin's greatest strengths. They act as advocates, as educators, as innovators. They're constantly pushing the boundaries of what's possible.
It sounds pretty utopian, almost.
Uh-huh.
But I'm sure it's not all sunshine and rainbows, right?
Yeah.
There must be some challenges, some risks facing Bitcoin, even with all that support.
Well, you're right. There are always challenges. Regulation, as we talked about earlier, is a big one. Governments around the world are still trying to figure out how to approach cryptocurrencies, and the potential for, overregulation is a real concern.
It's like they want to prevent illicit activities, but they also don't want to stifle innovation.
Right. It's a tough balance to strike. And then there's the issue of competition from other cryptocurrencies. I mean, there are thousands of altcoins out there. Some of them even position themselves as, Bitcoin killers.
So with all that competition, can Bitcoin really maintain its dominance, like in the long run?
That's the big question, isn't it? But Bitcoin does have a few key advantages. For one, it has that first mover advantage. It was the original cryptocurrency, and it benefits from brand recognition and what they call a network effect.
It's kind of like Google or Amazon, right? They were the first in their industries, and they've managed to stay on top.
Exactly. And beyond its history, Bitcoin also has a really strong track record of security. It's never been successfully hacked, and its decentralized nature makes it very resilient to attacks.
So even though all these newer, flashier cryptocurrencies are popping up, Bitcoin still holds a special place.
It does. It's the OG. And it's still the standard against which all other cryptocurrencies are measured.
Okay, so just to recap, we talked about the potential for a Bitcoin rally. We talked about the influence of altcoins and market sentiment. We touched on the halving event. We talked about technological advancements like the Lightning Network and the importance of the Bitcoin community. But we also acknowledged the risks, regulation, competition, and just the inherent volatility of the crypto market.
Absolutely. It's a complex landscape.
It is. And, with all that in mind, there's one more crucial aspect that we haven't talked about yet, the psychological factors that come into play.
Yes. That's a whole other layer.
Right. Like how our emotions and our biases can affect our investment decisions. I'm guessing that's especially important in a market as crazy as crypto.
You're absolutely right, because our emotions can be our best friend or our worst enemy when it comes to investing.
I'm intrigued. Tell me more. What are some of the psychological traps we should be aware of when it comes to Bitcoin?
Well, one of the most common ones, and probably the most dangerous, is FOMO, the fear of missing out.
Oh, I know that one all too well. It's that feeling you get when everyone else is making money and you're afraid of being left behind.
Exactly. And in the world of crypto, where prices can move so quickly, FOMO can be really intense. It can lead people to make impulsive decisions, like buying at the top of a bubble or investing more than they can afford to lose.
So how do we avoid falling into that trap? How do we keep our emotions in check when the market is going crazy?
One of the best things you can do is have a clear investment plan and stick to it. Decide in advance how much you're willing to invest and at what price points you'll buy or sell.
So having a plan can help you stay grounded.
Exactly. It can help you avoid making decisions based on emotion.
That's a good strategy. Yeah. What are some other biases we should watch out for?
Well, there's confirmation bias, which is our tendency to look for information that confirms our existing beliefs and to ignore evidence that contradicts them.
So if I already believe Bitcoin is going to the moon, I'm more likely to read those positive news articles and ignore any warnings about risks.
Precisely. And that can lead to overconfidence and a distorted view of the market.
So we need to make sure we're getting a balanced perspective.
Absolutely. It's important to seek out different viewpoints, even if they challenge what you think you know.
Okay, so we've got FOMO, we've got confirmation bias. Anything else?
Another one is anchoring bias, which is our tendency to rely too heavily on the first piece of information we receive, even if that information is no longer relevant.
I can see how that could be a problem. Like, if I first heard about Bitcoin when it was trading at $1,000, I might still think of it as cheap, even though it's worth way more now.
Exactly. Anchoring bias can prevent us from accurately assessing Bitcoin's current value.
Okay, so we need to stay up to date and adjust our expectations as the market changes.
Exactly.
So we've got FOMO, confirmation bias, anchoring bias. Are there any other psychological landmines we should watch out for?
One more that's really relevant in the crypto space is herd mentality. It's our tendency to follow the crowd, even if it means going against our own better judgment.
Oh yeah, monkey see, monkey do.
Yeah.
I can definitely see how that plays out in crypto.
Yeah, when you see a lot of people buying or selling Bitcoin, it can create this sense of urgency. And that social pressure can be really powerful.
But following the herd can lead to bad decisions, right?
Absolutely, like buying at the peak of a bubble or selling at the bottom of a crash.
So how do we avoid that? How do we stay independent?
One helpful strategy is to limit your exposure to social media and news headlines, especially when the market is volatile, because that constant stream of information can really cloud your judgment.
So basically, take a break from Twitter.
Yeah, exactly.
Yeah.
It can be good for your mental health, too.
It's probably true.
It's important to create space where you can think clearly and rationally without being influenced by the noise and the emotions of the crowd.
That's really good advice. And I think it applies to investing in general, not just crypto.
You're absolutely right. Understanding and managing our psychological biases is key to making good decisions in any market.
So to summarize part 2,
Yeah.
we've talked about the potential for a Bitcoin rally, the importance of the broader crypto ecosystem, technological advancements, the Bitcoin community, and all the psychological factors that can influence our decisions.
You've covered a lot of ground.
We have.
Yeah.
What else should we consider before moving on?
Well, we've talked a lot about the theory of Bitcoin, but in the next part, we should get into the practical side of things.
Like how to actually buy, sell, and store Bitcoin.
Exactly. We'll explore the different options, talk about security, and give some tips for navigating the world of exchanges and wallets.
That sounds like essential info for anyone who's new to Bitcoin.
Yeah.
I'm looking forward to it. Okay, so we've covered a lot of ground here. We've talked about those potential Bitcoin price swings, the impact of all those altcoins out there, even the psychology of investing. But now, let's get practical. A lot of you have been asking about how to actually get started with Bitcoin, so let's break it down.
Yeah, let's do it. It can seem a bit intimidating at first, this whole crypto world, but buying Bitcoin is way easier than it used to be. Remember back in the day when you practically needed a computer science degree to set up a wallet?
Oh yeah, it sounded like a real headache, but you're saying it's gotten simpler.
Much simpler. There are so many user-friendly platforms now that make buying, selling, holding Bitcoin pretty straightforward.
Okay, so where do we even begin?
Well, the first step is choosing a cryptocurrency exchange. Think of it like your gateway to the crypto world.
Okay, the gateway.
There are tons of options out there, so you'll want to do your research, compare fees, security features, user experience, all that good stuff.
Yeah, that makes sense. Any tips for finding an exchange that's, not going to run off with my money?
That's a smart question. Look for exchanges that have been around for a while, have a solid reputation, and ideally they should be properly regulated.
Okay, reputation and regulation. Got it.
User reviews and online forums can be helpful too. You can get insights from other people who have used the platform.
So once you've picked an exchange, what's next?
You'll need to create an account and verify your identity. This usually involves providing some basic personal info, maybe uploading a photo of your ID.
So it's kind of like opening a bank account.
Yeah, pretty much. It's all about security and preventing fraud, which is a big concern in the crypto world.
Right, makes sense.
Once your account is all set up, you can link your bank account or credit card, and then you're ready to start buying Bitcoin.
So it's really that simple. I can just click a button and boom, I'm a Bitcoin owner.
Pretty much. Most exchanges have these really intuitive interfaces. You can choose to buy a specific dollar amount of Bitcoin, or you can specify how much Bitcoin you want to buy.
Okay, cool. But once you've bought your Bitcoin, where do you actually keep it? You don't just leave it sitting on the exchange, right?
That's where cryptocurrency wallets come in. A wallet is basically a digital storage solution for your Bitcoin.
So it's like a virtual piggy bank for my crypto.
It's a good analogy, but unlike a physical piggy bank, a crypto wallet doesn't actually store your Bitcoin in one specific location.
Wait, what? If it's not stored physically, where does it go?
This is where things get a little technical. Your Bitcoin is actually stored on the blockchain, which is this decentralized distributed ledger that keeps track of all Bitcoin transactions.
Okay, so the blockchain is like a giant digital spreadsheet.
That's a good way to visualize it. And your wallet comes in because it holds your private keys, which are like secret codes that give you access to your Bitcoin on the blockchain.
So the wallet doesn't actually hold the Bitcoin, it holds the keys that unlock it.
Exactly. And there are a bunch of different types of wallets to choose from, each with its own security features and level of convenience.
Okay, break it down for me. What are the main types?
Sure. One popular option is a software wallet. These can be installed on your computer or your smartphone, like an app. They're generally pretty user-friendly.
So it's kind of like having a banking app, but for Bitcoin.
Yeah, that's a good way to think about it. Then you have hardware wallets, which are physical devices, kind of like a USB stick, that store your private keys offline. Since they're not connected to the internet, they're considered super secure.
So if you're really worried about security, a hardware wallet is the way to go.
Definitely, especially if you're holding a lot of Bitcoin. And then if you want to go old school, there are also paper wallets.
Wait, paper wallets? You mean like literally writing your keys down on a piece of paper?
Yep, that's exactly what it is. It might seem low-tech, but it's a surprisingly effective way to store Bitcoin for the long term.
So software wallets for convenience, hardware wallets for security, and paper wallets for the hardcore Bitcoin folks.
I think that's a fair assessment. Ultimately, it depends on your needs and your risk tolerance. If you're just starting out with a small amount of Bitcoin, a software wallet might be fine. But as you get more serious, a hardware wallet becomes a more attractive option.
And those paper wallets, are those just for people living off the grid?
They're more for people who are really comfortable with the technical side of things and are looking for that extra layer of security.
Okay, so let's say I've chosen my wallet. How do I actually move my Bitcoin from the exchange to my wallet?
It's pretty easy, actually. Most wallets have a receive button or they display a QR code, both of which generate a unique Bitcoin address. You copy this address and paste it into the send field on your exchange.
So it's like transferring money between bank accounts, but with Bitcoin addresses.
Exactly. Once you confirm the transaction on the exchange, your Bitcoin will be sent to your wallet.
And that's it. I'm officially a Bitcoin hodler.
You got it. Welcome to the club. But remember, being a responsible Bitcoin owner goes beyond just buying and holding. Stay informed, understand the risks, and always prioritize security.
You've given us a lot to think about.
We have, and we're always here to help. If you have any questions, don't hesitate to reach out.
Well, that wraps up our deep dive into Bitcoin. Price predictions, altcoins, the psychology of investing, and now the practical steps for getting started. Hopefully, you're feeling a bit more confident about navigating the exciting world of Bitcoin.
It's a journey, that's for sure.
It is. But hey, that's what makes it so interesting, right?
Absolutely.
Thanks for joining us on this deep dive, everyone. Until next time, happy hodling.